Ladies and gentlemen, a very good afternoon and welcome to the AFE Annual Conference Saudi 2021. Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Jassim Al-Marzougi and I will be moderating today's panel session titled Tokenizing Real Estate, Unlocking the Huge Potential of the Region. Joining me today on the panel, we have Mr. Thibault Cholet, partner at Private Markets Business and Technology Transformation in Deloitte. Also joining us is Mr. Christian Platzer, co-founder and managing partner at Black Manta Capital. Also joining us is Ms. Nida Raza, regional head of capital markets at JLL MENA. In addition, joining us today is Ms. Nouran Youssef, senior financial sector specialist leading the Arab region FinTech Working Group at the Arab Monetary Fund. Good afternoon, everyone. It's a pleasure having you on this panel today. So I think this is a very interesting and very hot topic that we're diving into today with respect to tokenization of a lot of different assets, but of course, specifically talking about real estate assets. Christian, I want to start with you, talking a little bit prior to deep diving into the MENA region. From your experience, what are some of the reasons and some of the interest for tokenizing real estate assets? And what do you see currently happening in the Western markets, and in addition to investors' appetite for such a structure?
Well, Yassim, first of all, thank you very much for having me. Shukran. And let me start with saying this. We are talking today about tokenization, blockchain, and finance, hosted by the Arab Federation of Exchanges. And we have a perfectly diverse panel with three female and 3 male participants. That's quite a rare thing when we look around the world when we talk about the subject. But jumping right in, we are a regulated financial services institution in Germany, regulated by BaFin, the German regulator, and under oversight by the German central bank. And we see, not only for real estate, but basically for any traditional asset, a huge potential and a huge demand in the market. So we started with our license a couple of years ago and did a small retail offering for a single property in Berlin. We are now running a real estate fund out of Luxembourg that's going to be tokenized, and. So what are we looking at there? We are looking with tokenization simply at a packaging. With real estate, we have a traditionally very illiquid asset. So it's a pain to buy, it's a pain to sell. You have to interact with land registries and so forth, especially in an international transaction. When you buy property in another country, it's extremely difficult. And we look at tokenization simply as the form of a packaging for a security, in that case, real estate. And that will basically cater to a huge demand of internationalization in the sector. We see cross-country, cross-border, cross-continent investment in the private equity real estate sector a lot, and this will make things a lot easier. And in the end, it will make all secondary trading a lot easier. So if you ask me concrete about the Western world, or I can talk more about Europe in specific, we see in Germany a quite forward-thinking financial regulator with BaFin, and also a forward-thinking German central bank. The German central bank, Deutsche Bundesbank, just announced last week that they successfully tested DLT-based securities settlement in central bank money without additional euro, and a series of other initiatives in cooperation with Deutsche Börse, the stock exchange in Frankfurt. And basically, when you look around Europe, from almost any jurisdiction is planning new legislation. From France or Luxembourg, we've seen interesting laws in Liechtenstein and elsewhere. And also on the European level, at some point, hopefully sooner than later, there will be some European directive like we had on crowdfunding or general, the MiFID directive on financial instruments in the market. So the topic is hot, the market is huge, but the whole thing is kind of moving like a glacier. So there's a big thing coming, but things take their time, especially when you're in regulated financial markets.
Yes, definitely, Christian. Thank you for the start and really helping us dive into the topic itself. I want to move on from what you've mentioned with respect to some of the benefits, as well as what you mentioned with respect to regulations as well, and what you're seeing in the European market, and moving on to Thibault, with respect to some of the work that you've been doing with Deloitte and your previous experience and prior experience. What do you see in more details in regards to some of the benefits of tokenization, and how is it creating opportunities in both primary as well as secondary markets?
Okay. Well, thanks. Thank you for having me here. It's a real pleasure. Just for the audience to understand who I am and the focus that I have, I am based in Luxembourg, so in Europe, very close to a Christian country, obviously. And thank you for this question, Jassima. So as Christian already mentioned, there are a few benefits and opportunity. I think if we consider the whole value chain of real estate investment industry, we address different type of actors. So we have investor, general partner, limited partner. We have the fund and the asset manager. We have the asset servicer, such as fund administration, transfer agent, custodian, depository. So a lot of counterparty stakeholders that need to work together. Okay, the asset manager work for the investor, the asset servicer work for the asset manager, and they are all, interchanging also over time the services that they provide or that they ask for those different parties. So for me, this is a potential for DLT to bring efficiency. Now, if we look at the industry, for me, it's still an industry, if you compare to the bank or insurance industry, that is globally poorly equipped in terms of technology. A lot of them still use spreadsheet or email-based collaboration. And in terms of exchange of information, there is no that much standard for data exchange. In Europe, even in Europe, for instance, you have Fiji in France, GIF in Germany, Redex in the Netherlands, that are initiatives to try to standardize the data exchange between those parties. Okay, so this results in kind of scattered and how do you say that, clustered ecosystem of technology where you have a lot of silo that result in many inefficiency and represent as many points of failures. So the beauty of tokenization is that it leverages DLT, distributed ledger technology, that by nature will be put in the middle of those actors, and de facto, will remove those silos and resolve those data challenges. We have a paper from AFE, the fund association in Luxembourg, that believe that by leveraging DLT, fund manager and issuer can enable programmability, eliminate duplication and inaccuracy, and drive efficiency as a whole. This in turn will improve processes and reduce costs for the administration of real estate assets and for the issuance and trading of real estate securities. So first point, I would say it's efficiency and automation. Second point I see as opportunity or benefits for the industry is accessibility and democratization of the investment. Today, real estate investments are made in private circle, usually, and are typically high value and low volume activity. So through digitalization that tokenization brings, I think that fund manager will be able to make their product visible and accessible more broadly, increasing their market reach while maintaining cost of operation low. This will enable to increase the volume of operation, and on the asset side, potentially also asset manager, fund manager will be able to consider lower value assets in their product. And on the investor side, increase the geographic coverage and investor base by lowering the entry ticket. Will we come to the point at which you or me would be able to invest directly in those assets? Is a question I can only answer with a crystal ball. No? But we can come to this point maybe in 5 to 10 years. And the last point I would like to talk about is also the increased liquidity through secondary market enablement. Today, we are mainly marketing close-ended funds when you typically commit for the long term. Through tokenization, you will open those funds and enable investors to sell their token directly to a third party, hence increasing liquidity. And investor will be able, to invest more frequently and exit more or less when they want.
So thank you, Thibault. I think that's excellent points in regards to some of the opportunities and really how the market is transforming and changing to with respect to tokenization of not just real estate assets, but all assets as we progress and move forward. I want to deep dive and a little bit into, now focusing on the Middle East market in the MENA region, and pivot and talk a little bit about what's happening here regionally. And I direct this question to Nida. So Nida, can you tell us a little bit about the region with respect to tokenization of real estate assets, and what are some of the elements that you feel may need to be further developed in order to continue to grow this segment and to increase to provide these benefits and opportunity to the region, like Thibault and Christian were mentioning?
Sure. First, thank you very much to the organizers and yourselves. It's a pleasure to be here this afternoon. Assalamu alaikum and good afternoon. Thank you for the question. From my perspective, I think there are a few elements that need to happen in order to really affect all the benefits that Thibault and Christian put forward in terms of the benefits of tokenization of real estate or any asset for that matter. The first thing is transparency. And I think the UAE and Saudi Arabia are in fact, including Bahrain, are taking making quite bold moves to try and provide some sort of transparency on transactions. One of the beauties about the Western world, with the benefits they've had, is that there is almost an instant record of transactions that have happened, whether it's because they're a tax regimented country, so individuals have to file taxes, or there's a land or stamp duty, etc., where they have to report land and or asset transactions. So this brings into it kind of a price discovery mechanism, which to this date right now doesn't really exist in this region and needs to improve. So I think that needs to be there, and it obviously has to be done through the authorities and some sort of system to capture that. I think one of the major benefits about for bringing tokenization into the Middle East will be that there are, as you very well know, areas that are freehold, open for anyone and everyone to purchase, and there are other areas which are only GCC or are in the UAE, Emirati only, or in Saudi only assets. And there, an international investor that just wants to make an investment in a prime location only has limited options. Whereas if you're able to tokenize it, you're suddenly opening up the whole of the UAE or whole of Saudi in a digital format for you to take an expression in terms of investment and risk. So those things, I think, are the upside. I think what's needed is transparency. Obviously, as Christian said, regulations, absolutely. So the one thing that liquidity brings with it is the ability to use it for matters which are not kind of kosher, let's call it. So it's important that there is regulations in order to prevent the likes of, money laundering and those sorts of aspects. So in order to protect that, regulation is important, but regulation needs to go hand in hand with transparency that's required, I think, in the region to make this asset prosper for everybody.
That's a very good point, Nida. I think definitely we see now, like you mentioned, various countries in the region that are really pushing for regulations and ensuring that it meets tokenization and digital assets meet the legal frameworks and requirements that are needed. And just I think touching upon regulations a little bit more, because I think this is a very important aspect when we talk about tokenization and development of digital assets. I want to direct this question to Naran. And what do you believe are some of the critical areas of development with respect to tokenization, digital assets, and regulations? And what are some potential maybe use cases around that?
Thank you, Jason, for your question. I'm really pleased, first of all, to be with you in this annual conference, and I'm really have a bit passion for this topic. When it comes to regulations, given the international developments and the regional developments that we see in the digital assets and tokenizations, policies, and so on, so we need to pinpoint some building blocks or strategies that governments need to take into considerations when initiating their tokenization project. So we have cross-cutting or broadband factors. We need, considering this decentralized type of tokenization activities and the exposure to particular risk, we need a comprehensive, inducive approach which take into consideration all the applications of the hyperledger, the blockchain, the smart contracts. We need also to promote the competitiveness and the consumer protection, the data protection. We need to conserve the cyber resilience, because it's really important within these all decentralized financial activities. Also, we need to link with our national identity system. This is in compliance to the AML-CFT risk mitigation. We need to have a blockchain strategy at the national level or framework, at least, for all these registrations of real estate assets and all the operations that will be built or using the DLT and blockchain nodes. Also, we can consider a phased or gradual approach because this industry, it's in infant phase, particularly in our region. So we need these comprehensive legislations or set of regulations to start with guidance, best practices, and so on, until we reach the binding full set of regulation or legislations. And really, to enforce the consumer protection, we need a strategy for awareness and building capacity to all the stakeholders, including the regulatory authorities and the staff, because we need to know. We need to know to regulate. So I think these are the main cross-cutting pillars, and we need to look in main pieces in this puzzle, which can be the initiation of the process regarding the governance. Who will govern what? The design and the implementation of laws, the regulating entities themselves. As I mentioned, the compliance with the AML, CFT, and the tax-related issues. Also, the amendments to the data protection cyber resilience framework. So, if we take quickly a few points on each of them, for the design implementation of laws, whether what we will be selecting as approach application of existing regulation or amendments of current framework, or even designing new regime, we need to establish a comprehensive framework that really be flexible, dynamic, and we can review it every time, like 1 year, 2 years, because there is a lot of advancement in this evolving industry. Also, we need the coordination between and the inspiration by the benchmarks, the regional or international experiences. We need to be inspired with some leading experience in the international jurisdictions. And for the sector-specific law, if we're tackling the real estate, we maybe need some functioning or proper framework for the functioning of tokens. For instance, specific guidance to the utilization of tokens for timeshare, for example, fractional ownership, or at least the title ownership. And also for the regulating entities, we have either the license approach to really give the license and authorize appropriate categories of licensees or particular players, or the guidance approach. And definitely the best use, I think, or the best compliance with the AML CFT, it will be the connection with the digital identity or the national digital identity framework, and to evolve the KYC better knowledge of your clients. In addition to the taxation issues, so institutions that are responsible for processing tax will be in real need to adapt their information system and processes to compute and deduct certain tax scheme on these nodes or systems and so on. And definitely with the high risk transactions, we need the enhanced due diligence and additional background investigations on the clients or the customers themselves. Also, these decentralized industry and the concentration of the DLT and blockchain nodes really needs some regulations to the applied new actors. So for instance, the trusted third parties guaranteeing the accuracy of information at the onboarding of the asset on chain, or the safeguarding of the assets, or new requirements may be needed or added, like the interoperability between the DLT and blockchain nodes, the interaction or gateways linking the on-chain and off-chain environments, and so on. So we need like associated operational risks that really need to be related to our regulation, and our regulation need to take into consideration all these risks. And I can conclude by the ensuring data protection and the cyber security or the cyber resilience framework at all for the financial market infrastructure, since we are applying this DLT or the blockchain or the decentralized in general atmosphere or environment.
Thank you, Dr. Nouran. I think you've touched upon a lot of very important and critical elements with respect to regulations around tokenization and what needs to be done moving forward. And you mentioned one point, which is an important point in regards to having some sort of mechanism in order to understand the underlying value of these assets that through tokenization will be available to the wider public. And touching upon that area, I just want to move to Christian and ask you, just in regards to, are there any specific underlying real estate assets within the market that are, the main focus of tokenization? And then maybe talking a little bit about, how is the process of valuing these underlying assets through a token?
Well, maybe two or 3 points on that. First, and this has nothing to do with tokenization or blockchain, investors invest in good opportunities and good assets. So this is a fairly traditional game. It does not change with the packaging. And if you cannot rent out your office building, it's probably not a good idea to tokenize it, because the tokenization won't add any value for the investor to it. That's the first thing. The second point I'd like to make is in regards to status quo and to a form of the financial markets we aspire to in the next years. In the status quo where we operate, be it in Europe or in most countries of the world, there's usually existing capital market laws applied. So there are very few jurisdictions that actually put something in place. So we also in Germany, we operate on the European MiFID II regime and on the German capital market legislation. That leads basically to many possibilities as it is today, if the regulator is willing to, but that also limits certain things where it's becoming interesting or not. So I'd say for the time being, when we talk about real estate, especially funds or REITs, that is trusts, are more interesting than single properties. When you go to single properties, and we did one last year, an offering in Berlin, then you have the limitations of, can you really grant equity, or do you grant something like participation rights into the profits and so forth of that property? And you can structure it a little bit differently with funds and with trusts. Now, I was talking, that's the status quo. But when we look down the road, what's possible with blockchain, not just in the financial markets, and what's possible with blockchain in terms of identity management, that leads us to land registries or company registries on blockchain, or basically to blockchain identities on a national ID card. Now, that then will lead to completely different forms of settlement and transaction possibility. And when you have linked everything there together, then you can make very interesting things like granting direct equity into a property and basically settling it or sending over the information directly on blockchain to a land registry when the transaction happens. So it's only called when, if a country sets up its land registry for you, I can only urge them to look into blockchain and to get something done in that direction.
Excellent. And I think, it seems that there's a lot of cross-border collaboration that needs to be done with respect to tokenization of assets. And Thibaut, I wanted to ask you a question just in regards to, from what you're seeing in the European market and with respect to cross-border collaboration, what is being done? What have you been seeing with respect to the Eurozone and collaboration and cross-border work with respect to this topic itself?
Yeah, thank you, Jassim. But on this point, I think Christian already introduced the fact that, in Germany, there was some movement in terms of regulatory framework that was done in the past. They accredited some initiative or some solution recently also by the BaFin. We have the same kind of initiative also from the regulator in Luxembourg. We had in France, in Malta, but those are individual and unilateral, I would say, initiative by the regulator in those markets. And if you look at globally, this is even more true. That every country is dealing with some specific regulation. In the US, it's the same. You have also some states that are more advanced and or allow more things than in others. So indeed, having not a single regulatory framework does not simplify and enable, I would say, cross-region, cross-geographic promotion of the distribution of assets. So will distributed ledger technology and tokenization enable the distribution of those type of assets, funds, trust in the world? It will, for me, only if the regulation is more or less aligned between maybe not all the global span of the distribution, but by region, at the minimum. And this is what we are currently doing in Europe, having the European Commission, starting issuing some proposal that they are asking the market to review for a law on the common regulatory framework for crypto assets and for the management of the operation of those crypto assets. So it does not only concern tokenization of real assets, but issuance of any time of what they call crypto assets. So they define the scope and understanding of what is a crypto asset, and also start to define the different operation and condition that they would like to see or that they will impose in fine to the European market. Okay, So you may have heard about, you know, those MiCA or DORA initiatives. This is what we are talking about here. The intent is really to have one single market, I would say, harmonized framework for the issuance, provision of services related to crypto assets, exchanges, and trading platform. You know, they want to mitigate risk, to protect investors, ensure financial stability, and you know, sustainable monetary policy, I would say, you know, from protecting the traditional infrastructure, but also the one that will enable crypto assets to be issued and traded. Okay.
Justin, can I just add something there?
Oh, sure.
Yes,
yeah.
please.
Pleasure.
Yeah, sure. Thank you. Just to look from my perspective, at least from the MENA region, look, one of the things that REITs were supposed to do historically, if we just take a step back, was to try and reach, give exposure to real estate to the retail sector. That was what the purpose originally of the REITs were, to try and get down to the retail sector, to the retail oriented REITs, etc. This is kind of a next step evolution. But we in the Middle East probably have the benefit of having both things together, because REITs for some reason really haven't taken off in a big way in this region. I know we had 13 or 16 REITs in Saudi Arabia, but majority of them were single asset REITs, which is not really the intention of REITs at all. So what blockchain or tokenization allows you to do naturally is bring that liquidity in, bring the efficiency in that Thibault talked about, bring the ability for things to be kind of more efficient, secure, and the evolution for all the stakeholders to be connected via a secure platform for instant reporting, which brings with it, you know, reduction in costs, reduction in admin matters, and for us in the Middle East to jump on that bandwagon and build our REITs from a blockchain perspective, I think would be a great result in 5 years' time, say, where all investments or exposure to REITs or exposure to real estate is done through, whether it's institutional or retail, is done through kind of this blockchain technology or through this tokenization methodology that we've been discussing.
Definitely. Now that very good points, Sida. And I think just touching upon the region a little bit more and what you were mentioning, and with respect to real estate assets, I think one important element is, of course, the education side, and for those within the region to be familiar with the whole process of tokenization and what it means to them, whether they're an owner of real estate property or if they're an investor, whether institutional or retail. And I think, you know, these are the platforms where we're disseminating that knowledge and information. But what do you feel is the appetite or the willingness of some of these, some of the real estate owners to kind of tokenize their assets? Has there been a demand for it? You know, has there been questions around it?
Individually, maybe. From a institutional perspective, you're talking about, you know, master developers, etc. They've taken the first step in trying to adopt cryptocurrency acceptance for purchases and things like that. But that's been on the institute, you know, on the end user aspect, right? Obviously, blockchain technology has not been widely accepted yet in this region, partly because people don't understand it, like you said. It's a nice fancy little thing. Maybe I'll buy, you know, $5,000 worth of Bitcoin or part of it or whatever. But understanding the technology behind it and the efficiency that it brings with it, it's still not properly known in my view. But I think it'll probably be led by those that have a portfolio of assets which are stable, like people said, or like Christian said, you know, assets that you can tokenize are ones that are good assets, that are stable, and that are income generating. Only then can you value enhance it by adding liquidity to it, and then the demand aspect follows. So I think it'll have to be those institutional investors that have a portfolio of stable income generating assets that they can initially tokenize and really dip their feet in and start kind of this process to get the ball rolling. But that's just my view.
Yeah. I do have a slightly different view. I think that, considering what the money that institutional investor put in the assets, and considering also, as I said earlier, the low volume of transactions that are occurring, from an asset side, but also investor side, where you have only limited number of investors in a fund. I would argue that you will not bring that many efficiency gain and benefits, by adopting tokenization, and those actors are not looking that much for a secondary market. On the other side, if you consider some assets that are less attractive for those funds, that are more or less leading the market. If you look at also some investors that are aware, because and that from a suitability perspective can indeed invest in some less attractive fund, you can imagine that investment club or other type of investor would indeed create a tokenization or tokenize some assets in order to be able to issue share that other investor would be able to buy. So maybe addressing another market and defining yet another business model for those assets to be invested in through tokenization.
Yeah, that's interesting takes. I think they're always good to hear different perspectives on this topic and this matter. Just for the audience to know, we're just getting to the conclusion of the session with a little bit less than 10 minutes left. So to the audience, feel free to, if you have any questions to the panelists, to write your questions within the CVent platform itself. And we'll get your questions across to the panelists to answer any questions you have on this topic as well. So that's the questions through the CVent platform. So I wanted to talk a little bit about we talked a little bit about the supervisory side of it, talking about national identity cards and talking about, how there are different ways to ensure that there's compliance and monitoring of investors, of those who hold these tokens with certain asset value behind it. Dr. Nuran, from a supervisory perspective, what do you feel are some key elements when considering the ability to tokenize assets?
We have main, let's say, pillars. So first of all, to start with is the greater clarity, because we need really ambiguity kills the market, and this is very new market, particularly in our region. So we need a greater clarity around the regulatory and supervisory frameworks that are applied to tokenized assets and markets. This will be really fundamental for stepping stone to the safety and the safe development and use of these tokenized activities. Also, you have mentioned the consumer protection, and so we need to bear in mind, or in our implementation of the supervisory framework, that we need to promote financial and consumer and investor protection, because market integrity and competition can be harmed if we can face really systemic risk if we're not ensuring a fair and orderly market for these tokenized assets. So we need financial education efforts that need to be really vital for the protection of investors in tokenized market. And this is particularly, as Nida have mentioned, we will aim to have retail investors in these markets and this area of the world. So we need much more appropriate understanding of the technological aspect of the standard financial knowledge, need to inform them about the participation of investors in such a market. Also, the tokenized assets themselves, which are typically secured by the investor private keys or the loss of the keys, and then the results of loss that may be occurring for the entire investments and so on. One important thing is we need really to have an applicable data privacy compliance, which is within the platform facilitation of the token offerings, in addition to the cyber resilience measures. Because in our region, for these data protection, most regulators have not completed yet separate requirements for the token offerings. So we need these two, the cybersecurity and resilience standards and the data protection as well. And I really would like to have working on building the national strategies for DLT or blockchain adoption, because it's really important having this aspect of the interoperability between these technologies and the shared blockchain system itself on the national level. It's really important. So we need to have this comprehensive framework adoption for the blockchain, whether the integration of blockchain services and the integration of blockchain with other services such as the smart contracts or the digital signature, in addition to other technologies, the artificial intelligence, the big data, which is used in this industry. Thank you.
Definitely. Thank you, Dr. I think, so we have actually one question from the audience. And the question is, so he was saying, I know, or he or she, apologies, I know we were talking about traditional real estate, but what are the panelists' thoughts on virtual real estate? So could we, for example, have a REIT on virtual real estate? So I believe the question is more of, okay, you know, if you have a REIT, can you move it to a virtual asset, so to speak? Christian, you want to take a stab at this?
I'm not sure. I understand the question is so there are now NFTs of real estate, you know, a digital villa you can buy somewhere in Dubai or wherever, and then you can basically bundle that into REITs. It is interesting. I mean, I wouldn't invest in a speculative object like that, but you know, in the end, the market is right. And we see a huge explosion of these things, be it in arts or also now in real estate, in digital real estate within NFTs. So I think in the end, the market decides, and if there is a demand, it's also like the question between Nida and Thibault, we will see. There will be traditional big private equity players that will go early into the field, and there will be projects for retail investors. We'll see.
From my perspective, Justin, just to answer that person's question, virtual real estate is, I think, a little far away because I think there's plenty of real estate for people to purchase virtually rather than purchasing virtual real estate virtually. But I do understand that there is this big fad around cards and art pieces, etc., which is being virtualized and then tokenized, which is an interesting concept, but maybe I'm too old to understand it. But I think there is still real estate to purchase, or maybe put the REITs onto a blockchain platform and make it a virtual REIT. But still, it's the underlying needs to be real assets, in my view. But that's just my view.
Yeah, but I think indeed you do have virtual assets such as digital music, digital art, etc. that are already I would say virtual and digital. The big challenge in real asset tokenization or real asset tokenization is the link between the virtual token and the physical assets. And in art, for example, it will be quite complicated, but also in the value of those assets. How do you ensure that you have the real link and you have a real asset behind the token? and how do you ensure that the value is something representative of the value of the physical asset itself?
Very true. Thank you very much, everyone. Thank you for being on the panel today. It's been an absolute pleasure hearing from you all and listening to your thoughts in regards to this very important topic of tokenizing real estate. Ladies and gentlemen, that's the end of the panel discussion. We thank everyone for attending and participating as part of the AFE Annual Conference Saudi 2021. Thank you very much, everyone. Have a wonderful day.
Thank you.
Thank you.
Bye.
Bye.
Thank you. Bye.